statewide benefits. We have 1 o'clock here on our end, and we do have quorum. So I'm going to suggest that we go ahead and get started with today's SEBC Health Policy and Planning Subcommittee meeting. Just as a reminder, this is a public meeting. It is being recorded, and we will have the opportunity for public comment at the end of today's agenda. So with me here in the Statewide Benefits Office conference room, I have our SEBC manager, Stephanie Hardis, Leanne Hinkle, our deputy director, and Carol Mick, our executive assistant. So I'm going to ask Carol. Carol, would you mind just going through subcommittee members that we have present for quorum today?
Yep. So I have Stuart Snyder, Ashley Tucker, Bert Scaletti, Bill Oberly, Jeanette Hammond, for Courtney Stewart, and Matt Crawford.
Great, thank you.
And David Betts.
All right. So our first item of business for this afternoon is approval of the April 15th Health Policy and Planning Subcommittee minutes. These are displayed on the Teams platform, and they were also provided to subcommittee members in your materials sent late last week. So I'll ask subcommittee members to take a look at those. We'll certainly entertain a motion to approve those when you are ready.
This is Bert. I'll move to approve.
Thank you, Bert. We have a second?
I'll second.
Thank you, Ashley. All right, so we have a motion and a second. Subcommittee members in support of approval of the minutes, please respond by saying aye. Aye.
Aye.
Aye.
And this is Jeanette. I'm abstaining from voting.
Thank you, Jeanette. Do we have any other subcommittee members abstaining today? Or opposed to the minutes? Right, hearing none, the minutes are approved. In terms of director's report, I just want to share a couple of updates specific to the May SEBC and subcommittee meetings with members. The financial subcommittee did convene this morning, and we spent some time reviewing the latest financials, as well as we had a discussion on what things are looking like in terms of the group health insurance plan forecast, and we opened a conversation up around the trend assumptions, which were revised at the beginning of fiscal year 2025. Willis Towers Watson provided some information to support some revisions or recommended revisions to those trend assumptions as we start to look at the budget for fiscal year 25, and we begin our budget and forecasting for fiscal year 26. So we will continue that conversation as well as the conversation that occurred with the financials with the SEBC when they meet next Tuesday. That meeting is scheduled for Tuesday the 28th. Due to the Memorial Day holiday. In addition to discussing those financials with the SEBC, we will also be reviewing the results of the Surgery Plus savings analysis. We will be asking the SEBC to vote on the proposed changes to the disability rules and regulations that this subcommittee recommended to the SEBC. So we had a discussion with them in April. I do want to acknowledge there are still 2 open items with regards to terms in those proposed rules and regulations that we will be further discussing with the SEBC before they vote on those proposed changes at next week's meeting. We are awaiting some direction from the Department of Justice with regards to those 2 open items. That is the only voting item for the committee at next week's meeting other than the approval of the April minutes. We will also be discussing or continuing a discussion that is with regards to the group universal life insurance benefit. So that's going to be probably a similar conversation to what we will have with this group this afternoon. And then we're going to wrap up next week's meeting with the committee, reviewing with them the group health insurance plan and statewide benefits office fiscal year 2023 strategic plan results. So I do want to mention two things with regards to next week's SEBC agenda, which will be published and sent out before the end of the day tomorrow. You will notice when this agenda goes out that we have moved public comment to the beginning of the meeting after approval of the minutes, after some discussion with the co-chairs. That moving forward will be a standard format for the agendas. We will take public comment prior to discussion on agenda items. That way folks from the public don't have to necessarily wait till the very end of the meeting to provide input. You will also see when that agenda comes out an executive session that will follow public comment at next week's meeting. A portion of the discussion related to the Surgery Plus savings analysis will be conducted in executive session. And then there is also a portion of the analysis of the group health insurance plan, strategic plan and framework results that also must be discussed in executive session. So those are the two items for that portion of the agenda. So before I move forward with just a couple brief legislative updates, do subcommittee members have any questions about the May meetings and agendas? Not seeing any hands raised. With regards to legislation, we are still monitoring a number of bills that could potentially impact the group health insurance plan. We continue to provide updates out to the SEBC prior to each of their monthly meetings so that the committee is aware of where bills stand in terms of moving through the legislature. But I want to make mention specifically to 3 bills that were introduced last week. These are bills sponsored by Representative Baumbach, and they tie to 3 of the recommendations contained within the Retiree Healthcare Benefits Advisory Subcommittee report that was released December 31st. Those bills are House Bill 375, 376, and 377. So we expect that those will be moving through the House and going to committee here shortly. I don't believe they are not yet scheduled for committee, at least for this week. The legislature will break for 2 weeks, starting next week for the joint finance budget markup hearings. The other mention with regards to SEBC related bills, House Bill 281 and 282, which were filed earlier this year. I believe both of those have passed in the House. There's been no further movement through the Senate on either of those bills. So I just wanted to share that with the group as well. That kind of wraps up the things that I wanted to share. Oh, I'm sorry, one other item that rather than wait till other business, Stephanie asked that I share with both of the subcommittees that the benefits office would like to hold a combined subcommittee meeting for the month of June. As you may recall, we've kind of talked back and forth about from time to time when it makes sense based on agenda items that we would hold a combined meeting. We'd like to do that for next month. The subcommittees for June are currently scheduled for June 17th. If we hold a combined meeting, we would hold that meeting from 10 to noon. So for those of you that serve on the financial subcommittee, that would just free up a little time for you that afternoon. But for those of you that do not serve on the financial subcommittee, we'd be asking you to meet with us instead that morning. The 2 items specifically that we'd like to discuss have to do with the site of care steerage report. And Stephanie, I'm turning to you because I don't have the email open and I'm forgetting what the second topic was.
Sure, it's gene therapies.
Thank you. Gene therapy. So that's been another topic that's kind of emerging in the marketplace that we felt might be helpful for both subcommittees to participate in that discussion. So I'm going to pause there. I want to make sure that policy and planning subcommittee members don't have concern or objection to our holding a combined meeting for June. And again, that would be June 17th from 10 a.m. to noon. I am not hearing any. So with that, I would say look for a cancellation from Carol this week for the afternoon meeting and an invite for you to attend that combined meeting in the morning again on June 17th. So before we continue on with the agenda, does anyone have any questions or concerns with regards to legislative updates that I provided? Okay, so we're gonna talk briefly about updates to calendar year 2024 request for proposals. So nothing prepared here to share with the group, and I apologize because I think this is actually on, yes, it is on the SEBC agenda as well for next week. We had reported out to the subcommittees and to the SEBC timelines for 3 RFPs or requests for proposals that the benefits office is working on. Those being the flexible spending, pre-tax commuter, and COBRA administration RFP. So that's one RFP. We talked about accident and critical illness. And then we've talked about the employee assistance program RFP. The timelines that we previously provided and shared with all of the committees suggested an advertisement date for those 3 RFPs for the May timeframe. In discussions recently and as part of our drafting of those 3 RFPs with the Department of Justice, it was brought to our attention that there was some outdated provisions in our standard RFP templates that needed to be updated. So that additional review and those updates to the RFP template that we use for all of our RFPs is currently underway. Our Deputy Attorney General is working on those edits, but it really pushed us in terms of being able to submit those final RFPs to our friends in OMB and government support services. They would require a 2-week advance submission of those final RFPs before they're actually advertised. So what we did is we revised our timelines and we pushed out advertisement for those 3 RFPs for mid-July now, so basically another 60 days. We are still shooting for contract award recommendations to the SEBC before the end of the calendar year, so that if there is a change in any of our current vendors for those services, we would still have a 6-month period of time in which to implement and change vendors, as well as communicate that out to the plan participants so that they would be ready for any changes for the July 1 plan year and for next year's open enrollment. So we will be sharing these updates and the revised timeline with the SEBC at next week's meeting. It's really more just an FYI at this point, because again, the back end, we've condensed the time frame to still finish those RFPs before the end of the calendar year. We will be, following next week's meeting with the SEBC, we will be reaching back out to the proposal review committees for those 3 RFPs, because they have been selected. They also have on their calendars a couple of key meetings that would be coming up in the August and September timeframe around just the review of the RFP bid responses, the interviews with the vendor finalists, our scoring and recommendation meetings. Those will obviously need to be pushed further out as well. So we are planning on engaging with the review committees as soon as the SEBC receives this update next week, and changing those dates a little bit further into the fall. In addition to those updates, I will be hopefully providing as well a high-level time frame for the group universal or the group life insurance RFP, right? That this group is continuing to discuss as it relates to what a scope of work might look like for that RFP. We're currently targeting the first quarter of calendar year 2025 to advertise that RFP. And then the fifth RFP that we're working on this year that we've really not talked much about would be an RFP for auditing for claims administration and contract compliance for our self-insured health plans and our pharmacy benefit programs. That RFP, we also want to engage with this group and the SEBC on potentially making some changes to the scope of work. So we're kind of targeting the summer months to have those discussions with you and hopefully release that RFP or advertise it in Q4 of this calendar year. So probably October, ideally, we would advertise that. That RFP is a little less time sensitive because it is mostly an administrative contract, doesn't impact benefit programs or services, so it's not something we need to communicate out as part of open enrollment. And then I think as, you know, in kind of wrapping up these updates, I think this group is aware, you recommended to the SEBC in April that they consider working with Securian to extend the current contract for group universal life benefits for an additional year. We are in negotiations currently with Securian, and we'll be providing the SEBC with an update next week on those negotiations. But all indications are that we will be able to successfully extend the current contract. So that buys us an additional year to move through that RFP process. You know, that'll pretty much happen during calendar year 2025, but will allow us early in 2026 to communicate any changes and include that as part of open enrollment for that year, as that contract, as a result of that RFP, will not go into effect until July 1st of 2026. So I know that was a lot to take in there. Takeaway from that, though, is for those of you that are serving on a proposal review committee, please look next week for some additional information coming from our office on changes in dates for, like I said, those key meetings tied to the FSA pre-tax commuter, EAP, and accident and critical illness RFPs. Any questions from the group with regards to that before we move on? All right, I think we're going to dig in then and say hello to Jacqueline Iglesias with Little Stars Watson. I think, Jacqueline, you're going to lead us in the discussion today on the group universal life benefit.
I am. Thanks and good afternoon, everyone. So we're going to continue the discussion of the group universal life benefit, and we're going to start out first by providing a little bit of a recap to subcommittee members following our last meeting, as well as some context that would be helpful just to keep in mind as we begin today's discussion. So as a reminder, the state's group universal life contract with Securian is currently set to expire on June 30th of 2025. following the last subcommittee meeting in April, several key points related to the program, including some background on the Group Universal Life benefit, upcoming options for the Group Universal Life contract, whether they be renewal or procurement, as well as some details on the Group Universal Life vendor marketplace were provided to the SEBC in April. Also at that meeting, feedback from this subcommittee was shared and discussed with the SEBC. And as a reminder, that included a recommendation to the committee to move forward with procurement of a life insurance benefit. And then in the interim, to allow for some additional time to run that procurement process, have the state negotiate a one-year contract extension with Securian. So the committee agreed with the subcommittee's feedback and directed the SBO and the DPW team to move forward with negotiating that one-year renewal, as Faith mentioned, that is in progress, as well as beginning the work on a life insurance RFP. So today's discussion will really dive into some additional details related to some of the benefit options that would be included in a life insurance procurement, as well as talking about some of the member impacts to consider. So further discussion and some of the outcomes from today's meeting will be shared with the committee in either May or June for some further discussion provided based on the feedback that committee members or subcommittee members will share today. So as we start to think through what a life insurance procurement would look like, and more specifically, what would the scope of requested services in that RFP look like, there's a couple key questions that we'd like to start the conversation about today with the subcommittee. That includes what sort of life insurance plan design would be requested that would cover employees, pensioners, and any eligible dependents. We talked a little bit about the current pool of insurance carriers that support Group Universal Life products today. So how would that pool of potential bidders change if the scope of the requested for proposals were to include a different type of life insurance product? And then, just as important, what would the impact be on current Group Universal Life Plan participants if the life insurance benefit offering were to change? We've noted just two of the multiple member scenarios that could potentially be at play. I think these two have come up in some of our past conversations, either with the subcommittee or with the SEBC. So we'll talk a little bit more about the scenarios where if a plan participant has taken a loan or a cash withdrawal against their current cash value account, what happens, as well as for those plan participants who may have developed medical conditions after they submitted that proof of good health, or as it's formally known as evidence of insurability, what happens if they have a new condition and the plan design or the type of plan were to change. So we'll talk about that in a few slides. Before we dive into some of the key provisions of the current Group Universal Life Plan, as well as what we're seeing from a benchmark standpoint, we wanted to spend a minute just talking about the typical plan provisions when you compare a Group Universal Life Plan with group term life insurance. So the chart that we're looking at here is going to go through what are some general key provisions between that differ between Group Universal Life and Group Term Life. This is not intended to reflect the state of Delaware's state employee life benefit under the Universal Life column. This is a general summary of the key provisions we typically see for Group Universal Life plans versus Group Term Life plans in the market. So getting into some of the details here. So one of the things we talked about in prior meetings was the fact that today the Group Universal Life Plan has a cash value account, and that's a standard product feature for Group Universal Life plans in general. You may also hear it referred to as a side fund, but basically this is an account that allows for tax deferred earnings on investments that may be made. We've talked in the past specifically for the state's group universal life plan that the cash value account offered to employees and other plan participants has a guaranteed rate of return of no less than 4%. And I think in one of our prior meetings, there were some questions about what is the average interest rate earned on the plan. And so we have some additional details that I'd like to also share with you now. So specifically for the state's plan, the average rate of return for that cash value account over the past 5 years has produced an average interest rate of 4.01%, so just slightly above the minimum interest rate guaranteed. And the highest rate over that 5-year period has been 4.35%. So it just gives you a sense of a little bit of what the range looks like for the state's current cash value account offered through the current plan. For group term life insurance, there is no such cash value account. Looking at administration, and this is really referencing some record keeping associated with life insurance plans in general. So more specifically, for example, who keeps beneficiaries on file? Who maintains that official record of who the beneficiaries are? Is it the carrier, the life insurance carrier, or is it the plan sponsor? And typically we see with group universal life plans, a lot of that administrative effort is really entirely managed by the carrier or the third-party administrator. For some elements of group term life insurance, those can be self-administered by the plan sponsor, but what we are seeing is a shift in the vendor marketplace such that insurance carriers are often competing with various levels of outsourcing and integrated administration. So, there's a lot of different options that could be requested from a plan administrative standpoint. I would say that that's probably a little less important for broader discussion with the policy and planning subcommittee, and then maybe a little bit more of a focused conversation for the SBO, but wanted to just highlight that there are a couple kind of key differences from an administrative standpoint that do exist between a group universal life plan and a group term life plan. In terms of billing rates or premiums, group universal life typically is either on a 1-year or 5-year age band. For the state specifically, it's a 5-year age band, whereas group term life, we just tend to see 5-year age bands be a little bit more common. Imputed income is not an issue or a factor related to group universal life, but it can be a factor with group term life. So that's typically, so just as a quick aside, imputed income is basically the value of the income tax that the IRS puts on group term life insurance coverage in excess of $50,000. This really comes into play when there's both an employer paid and employee paid components to a life insurance benefit. And we'll talk a little bit more about that in a minute when we talk about some of the benchmark data that we've prepared on group term life benefits. However, knowing that the state's current plan is an employee pay all benefit, we don't think imputed income is really going to be a consideration or a concern, especially when we talk about group term life. In terms of dependent coverage, there are opportunities to cover spouses and children through either policy riders for group universal life or for group term life. These are technically separate lines of coverage, but the point is there's an opportunity to cover dependents, both children and spouses who are eligible under either type of policy, just written from a policy standpoint a little bit differently. We typically see retirees being offered coverage under group universal life. It's offered via the portability provision, which basically allows a member or plan participant to take their current coverage with them as a group policy still. It gets underwritten with other ported group policies. So it's outside of the group health plan, or I'm sorry, it's outside of the employer's life plan, but it is still group underwritten. So your rates are going to be less than it would be if that were an individual policy. So again, group universal life, we typically see retirees being able to port that coverage. Group term life, it's really up to the employer's discretion. We have seen a shift away from many employers offering group term life to their retirees or to new retirees. But again, it's entirely up to the employer plan sponsor whether that's an offering. We touched on portability a little bit. It's standard for group universal life. It's up to the employer whether to offer it on group term life. But conversion, which basically is, again, being able to take that policy with you, but it's underwritten as an individual policy. So the rates are going to be even higher than what they would be under a group policy. For some group universal life plans, conversion really varies by carrier and by member specific scenario. But under group life, but under group term life, it's really a state mandated requirement. When an individual loses group life eligibility, that state mandate allows them to convert their coverage amount into an individual life policy. The next two items, loans and paid up life, are really features of group universal life policies and not really part of term life coverage. But because of the existence of that cash value account or that side fund account, participants in a group universal life plan can take loans out on any accumulated balance in that side fund. There's usually provisions around what qualifies somebody to take a loan and often caps on what those loan amounts can look like and paid back with interest. But again, there is an ability to take that loan. There's also an ability in some cases to have a fully paid up life insurance policy, which so basically it allows people to make additional contributions to that cash value account that once it hits the amount of the policy being paid in full, meaning no future premium payments are required. So it basically allows plan participants to stop making payments because the cash value account matches the amount of additional premiums that they would have to pay, even though the policy will continue to remain in force from that point forward. Again, this is a general provision. It may work a little differently under specific plan scenarios, but just generally speaking, it's a facet of most group universal life policies, but not really in place under group term life. And then finally, the prevalence and median plan design. These two features were pulled from our benefits data source database. It's a benchmark database of well over 1,300 different employers. I'm just noticing that some of this data is just a touch bit dated. The chart was created last year, and some of the benchmark data, particularly for group term life plans, has shifted slightly. We'll get into that in a minute, but the point here is that the directional results still hold, meaning group universal life plans in general are far less prevalent than group term life, especially when offered by employers. But we do see group universal life plans tend to have a higher multiple of someone's annual earnings as the most common plan design. We are seeing group term life plans sort of shift. So we typically see median plan design values being around 5 to 6 times someone's annual earnings, but we're seeing more employers start to increase that amount to be closer to the up to 8 times multiple. So kind of getting comparable to the group universal life in terms of the median plan design value. I know that's a lot to process and a lot to go through, but certainly happy to pause and answer any questions that individuals may have. And I see, Matt, you have your hand up.
Yeah, thank you. This is helpful. I just want to make sure I understand like how the rates are determined. And so like I understand like the basics of like individual term life. So in the group term life context, is it the case that I'm a 27-year-old employee? Am I locking in that rate once I initiate coverage in the plan? Or do I pay, if I'm a state employee my whole life, am I paying whatever my 5-year age band rate is as I age forward?
It would be the latter. So you'd be paying whatever your 5-year age band is as you age forward, much like the plan works today for the group universal life.
Okay. All right.
Any other questions I can answer? Okay. So moving on then to some additional plan design considerations. So as we think about what the potential RFP scope of services could look like, one suggestion for consideration and ultimately feedback from policy and planning subcommittee members is around the requirement of which types of plans for bidders to quote on in an RFP. The suggestion here is to require bidders to quote on either the current life insurance plan, so group universal life for employees and term life for spouses and children, or an alternative life plan design offering that is based on a group term life policy for employees, spouses, and children. And we'll get into some of the details on that in a second, but have bidders quote on either one of those two options or both of those two options that would allow the SEBC and the proposal review committee to potentially evaluate pricing and alternatives across two different types of life insurance benefits, which again would provide for a larger pool of bidders. Specifically for the alternative life insurance plan design, here we've just mapped out some proposed features, which include designing that term life insurance that's offered to employees to include the same coverage level options that are in place today under the current group universal life plan. So structuring the coverage multiple that somebody could select to be between 1 and 6 times an employee's base annual salary. So kind of keep that consistent to what someone could get under the current group universal life plan. Further, accidental death and dismemberment coverage, which is part of the state's group universal life plan today, could also be included and structured in a way to match the current life insurance coverage level. And then we've included some additional details on this following slide, which we'll get into in a minute, that just shows how this proposed design option compares to other term life insurance plans and benchmark data that's available. So structuring the scope of services in the RFP to request that bidders quote on either one of these two options or both of these two options is a suggested alternative. This, of course, would need to be reviewed with the SEBC's legal counsel just to make sure that it is compliant with any procurement requirements that exist under the Delaware Code. But we wanted to suggest this as a starting point for feedback and consideration or comments from subcommittee members. So I'll just pause and see if there's any questions or thoughts or reactions to this as a potential approach.
Hey, Jacqueline, it's Bert. I'm sorry, I think it makes sense. One question though, I think you mentioned on the previous slide that a term program would have to be self-administered. Would the bidder in this case, if they were going to bid some term, would they have to partner with a TPA or?
Yeah, Bert, that's a great question. And thanks for the opportunity to clarify that. So the reference to administration being typically self-administered for group term life, that's more around some of the record keeping functions that the plan sponsor or the insurance carrier would need to maintain. So it would be things like, where does the life insurance beneficiary information get kept on file? Is that something that the plan sponsor or the state handles, or is that something that the insurance carrier handles? It would not necessarily require the involvement of an additional party beyond a life insurance carrier to do that work. And in addition, we do see a lot of the life insurance carriers, all of the major ones certainly, offer multiple alternatives for how a plan sponsor how they can support a plan sponsor with administration. So by and large, if the state wanted to replicate a lot of the main administrative functions that the SBO, the HR Ben reps typically follow to administer the current group universal life plan, there are ways to do that under the group term life, under a group term life policy.
Okay. Thank you.
Good question.
Jacqueline's faith. My question is more specific to the AD&D coverage, which we have as a component of today's GUL plan design. Is that standard that coverage is typically available with either GUL or term coverage?
It's typical for GUL. For term coverage, where we see AD&D typically offered as a additional standard benefit, is for employer paid basic life. So most employers that offer term life insurance offer an employer paid component, which is usually 1 to 1.5 times someone's base salary. There is an additional offering that is fully employee paid, that is where you start to see some of the higher multiples of salary being offered. And it's usually offered as a buy-up above the employer paid portion. For that buy-up life insurance, there's also typically buy-up AD&D. So somebody can kind of selectively buy just greater life insurance or just greater AD&D coverage. And there's options to structure these and structure the AD&D component so it is more aligned with how the state funds life insurance today, meaning we can structure the request for proposal to specify that any life insurance and any AD&D coverage that goes along with that life would be entirely employee pay all like it is today.
Okay, thank you.
I'm not.
Another question with regards to this option for consideration. Would we be suggesting that as part of the scope that the SEBC could award both, or would only award one? Because I'm trying to understand how an either or both option would, how that could potentially complicate proposals from a premium standpoint if it's not clear what the potential universe of participants would be.
Yeah, that's another great question. And our recommendation would be to offer one, but not both. The rationale for allowing bidders to quote on one or the other type of life insurance plan would be to provide the SEBC and proposal review committees with the broadest possible scope of plan options and bidders for consideration. We recognize that there have been questions raised about the member impact related to changing the life insurance benefit from a group universal life to a group term life policy. So again, to allow for the committee to have the flexibility if at the end of the day they want to decide to keep the group universal life policy, this option would potentially allow them to do that, because that would be one of the types of quotes that were solicited. But we wouldn't recommend that both group universal life and group term life be offered for employees, be offered alongside of each other and have the employee pick. We think that would be far too complicated for several reasons, for both members, the plan, the carrier. So just wanted to clarify that.
Yeah, so thanks. And I know Matt has a question, but while we're kind of on this same topic here, if I could ask just one more. So I'm understanding that and recognizing that we may have GUL plan participants today who could be potentially harmed by a move away from the existing plan and design. Is there an option? I mean, I know there's an option for those plan participants to port their coverage and probably stay with Securian for a group universal life plan. What I don't know is if that also would extend to these other benefit provisions that exist today. So for example, you know, we just talked about the cash value account. We just talked about the AD&D coverage. Like, is there a scenario if the SEBC moves to a term product that current GUL plan participants could continue to basically keep that plan and any associated components of that plan through a ported arrangement with Securian?
Yeah, great question. So based on the current plan provisions in the Group Universal Life Plan, the GUL plan today, porting or converting, again, porting goes to, you know, a pooled book of business group life policy. Converting goes to an individual policy at a higher premium. Members, plan participants who choose one of those options are able to keep their current coverage, and that would extend to the cash value account, and that would extend to, you know, the AD&D coverage. Our understanding, and we're certainly happy to take this back for further confirmation, but if the SEBC were to change the life insurance product offered from group term life, or excuse me, no, from group universal life to a group term life product, that the porting and conversion options would still be available to current group universal life plan participants who wanted to remain with that coverage. We can take that back to confirm that, but that's our current understanding of how that would work.
Okay. Thank you, Jacqueline. Matt, do you want to ask your question? Thanks for your patience.
Oh, no problem. So I apologize if you get into this later, but if I'm understanding correctly, and this is a fully employee pay benefit, I think, do you have any info on, like, just as a general matter across the market, how do the premiums compare between these two products for an identical coverage level?
Yeah, it's a great question, and I think we would need to. So the short answer is no, we don't have really that information readily available. I think that would be part of the potential benefit of structuring, you know, the RFP so that bidders would be being asked to quote on plan designs that have, you know, a lot of the same features, and I'll be careful to say it's not all of the same features, but, you know, matching things like the options of the base salary multiple that employees can pick, having coverage for spouses and children as options, but at the same levels as the current group universal life plan. I think that's really where we're going to be able to have a better insight into how comparable the premiums are for group term versus group universal life.
Okay. Yeah. I know that some states I've seen that they publicize, like, in their health benefits packets every year, they publicize the term rates and the AD&D rates, but I don't know how identical the extra stuff is to what's currently in place. So
yeah, and part of the other challenge too, just to add a little more color there, the prevalence of group universal life plan offerings is relatively limited, so there's not a lot of data available on just the benchmark rates associated with those types of plans. Okay, any other questions? Okay. All right, so moving to some plan design benchmarking. So this chart outlines the current provisions, some of the key provisions related to the current group universal life plan for employees and the corresponding term life coverage options available for eligible spouses and children under the plan today. So we've got the state's current plan design with some related notes about the coverage provisions sort of in the middle of the chart. And then on the far right hand side, we have some benchmark data from our benefits data source database, along with other trends that we're seeing that go along with some of the plan design considerations that we'll talk through. So taking this row by row for employee group universal life, as I mentioned earlier, today employees can select from between 1 and 6 times their base annual salary as their coverage amount, with a maximum coverage of $350,000 as the total benefit. And as we just were discussing, there's an AD&D benefit that goes alongside and matches that group universal life amount. So if someone has a qualifying event, either due to an accident that is up to and including their death as a result of that event, the policy would pay an additional benefit that matches the coverage amount, simply because there was an accidental impact to that employee, whether it was death or whether it was some other disabling event. So I won't go through some of these other notes about the employee coverage, but certainly happy to address questions there. I want to turn to the benchmark data and trends column to talk a little bit about what we see from a term life coverage perspective. As I mentioned, this is the far more prevalent type of life insurance benefit that employers offer. I had referenced there's typically 2 components to group term life that's offered by an employer. So there's basic term life, and we have about 99.5% of employers in our benchmark database offer a basic term life benefit, which is typically employer paid. It's usually 1 to 1.5 times an employee's base annual salary. In addition, there's usually a employee paid component of that life coverage that is then entirely employee paid. And that's where you typically see the higher multiples of someone's base salary. If they wanted to pick 2, 3, 4 times their amount, that would be a buy up. The employee would have to pay for that. But it is common. We do see about 93.5% of all employers in our database have that as another component. So taken together, when we look at this employee term life, there's an opportunity for most employees to typically pick between 1 and 6 times their base annual salary, with 6 times being the highest multiple of pay that we typically see as the median in our database. We have started to see trends where some employers are increasing that max salary multiple to 8 times salary. So we are seeing that slight shift, but relative to benchmark, the fact that the state's current plan is already at a 6 times base annual salary is relatively comparable when we look at other life products, even though they're group term life and not group universal life. For most group term life policies, the median maximum amount of coverage is a bit higher than what the state offers today. That median for the benchmark is around $1 million. And this is, again, just looking specifically at the employee paid portion of the life coverage amount. When we look at employee plus employer, that increases to about $2 million. But again, trying to make this as comparable as possible to the state's current plan and just looking at the employee paid portion of the life benefit in our benchmarks. We touched on already how there is no cash value account typically associated with term life insurance, and the fact that there is an AD&D benefit that typically mirrors the life benefit, with an option most of the time for employees to buy up coverage to fully cover the employer and employee paid portion of their life benefit. Turning our attention to spouse life. This one is a little bit more directly comparable because the state's plan today offers both spouse and child life as term life insurance policies. So under the plan today, for spouses, employees have the option of selecting either $10,000 or $20,000 of coverage for a spouse. We typically see, again, for those employers that offer any sort of life benefit, about 99.3% of those offer spouse term life as an option. The vast majority, again, 89% of employers typically offer this coverage as a fixed dollar amount. So the fact that, you know, we're looking at 10,000 or 20,000 is consistent with how most other employers offer this life benefit for spouses. The other options, which are not common, we don't see a lot of, is things like offering a percentage of the employee life coverage amount or a percentage of the employee's base annual salary. But again, those are not common. We far more often see this fixed dollar amount. In the benchmark database, that dollar amount is higher though. So we typically see as the median amount, $150,000 worth of spouse life coverage. So slightly higher options out there in the marketplace. Certainly, we do see employers offer $10,000 and $20,000 increments of spouse life coverage. So again, you know, we could certainly envision there being an option for bidders to offer these amounts in an RFP. And then similar story with child life. Again, for the state, you currently offer $10,000 or $20,000 of child term life insurance per covered child. We do see the vast majority of employers from a database or from a benchmark standpoint offer child term life, with again the vast majority offering it as a fixed dollar amount. We do see the median highest amount of coverage offered of around $10,000. So the fact that the state's plan today is offering that option to insure a child of up to $20,000 per child is more is richer than the benchmark. So, you know, that's a more favorable plan option that is currently in place today for employees. So I wanted to provide this as some additional color commentary for your consideration. I think it goes into some of the discussion that we had earlier around looking at structuring the benefit to be consistent with what the plan looks like today. If we're looking at benefit multiples and how much coverage is being offered for employees, it's largely comparable to what we see in the market with a slightly lower max coverage amount. Spouses, it is a bit lower, but we do see a lot of employers offer under 25,000 as options for people to choose from. And then for child life, the state's offering a slightly better or richer option than what we typically see being offered in the broader marketplace. So just to spend a minute on the carrier marketplace. So we had talked before that there's really only 3 insurance carriers today that currently offer group universal life, those being Securian, MetLife, and Prudential. If the state were to decide to open up this procurement to include requests for term life insurance, there's a number of additional insurance carriers that offer group term life policies. We've noted a few of the major ones here that do typically tend to focus on plan sponsors that are of comparable size to the state's current group universal life plan. You'll see that this list includes the 3 carriers that also participate and offer group universal life. So this is just broadening the pool a bit beyond Securian, MetLife, and Prudential. And then spending a minute or two on the member considerations. So there have been some questions that have been raised in prior meetings about what happens to plan participants who are in certain situations. One of them is around those plan participants who have taken loans or cash withdrawals against their group universal life cash value account. In general, it's likely that most plan participants would need to repay those loan amounts prior to the termination of the Group Universal Life Plan. You may be wondering how many plan participants currently have an outstanding loan balance, and we've been able to obtain that information from Securian. So today there's about 118 current plan participants, which is, just doing quick math, it is a small subset. It's about 1% of your plan participation in general has an outstanding loan balance. The average balance of those loans is approximately $2,100. So, just to give you a sense of the order of magnitude of folks who may have an outstanding loan. So that's one question that we've heard. And then the other question is around for plan participants who may have already gone through the process of submitting proof of good health or evidence of insurability, as it's called in the industry. What happens if they then develop a medical condition after they go through that process? And if the plan is then terminated, what happens to them? So if the plan is terminated or if that offering changes from Group Universal Life to Term Life, some plan participants may need to go through the evidence and insurability process again, but this is going to vary from vendor to vendor. What we typically see is group coverage transitions to a new carrier or to a new type of life plan offering on what's called a no loss, no gain basis. So there would be no plan participants who lose coverage as a result of that change, as long as that coverage amount falls within the plan maximum. So we were talking before for employees, how the current plan maximum today is $350,000. So as long as people have coverage amounts that sort of fall into that plan maximum, if that maximum is maintained under the new policy, then they probably would not have to go through additional evidence of insurability. But again, this is going to vary by carrier to carrier and certainly would be something that is explored further in any RFP process through the questions that would be asked of bidders. From our last discussion, there was also some questions about just what is the evidence of insurability process and what does that look like for the current plan? So today, employees who go through that process are asked to answer 3 questions about their health history and provide their height and weight. Depending on what those answers are, Securian may ask for additional information, which could include a more detailed medical questionnaire or health records from that employee's physician. So it could be additional information that's required based on what the employee initially answers in terms of those general health history questions. And we would certainly be sure to ask during the process of an RFP what each bidder's evidence of insurability process would include to understand if there's any significant differences or any member-specific considerations that would need to be evaluated as part of any potential change or migration of the state's plan. So in terms of next steps, certainly happy to take any additional questions, comments, feedback. Matt, I see your hand up, so I'll get to you in just a sec. But certainly happy to take any further discussion now. To the extent there are follow-ups, and there have been a few, we can certainly have additional conversation about this topic in June. And there will be, as Faith mentioned earlier, a brief update to the committee at next week's meeting about this topic, and we'll certainly be sure to include any feedback that committee member or subcommittee members share with us today. So Matt, did you have a question or comment?
Yeah, could you go back to the last slide? So just to go back to this issue again, could you, the idea that participants would need to repay loan amounts, would this apply even if they ported their coverage? They would still need to repay, and because the GUL plan would be terminated?
Yeah, great question. So let us get some further clarity with Securian on that item. There is a subset of participants that have ported coverage previously that are grandfathered under some changes that the state had previously made to the Group Universal Life Plan. And I'd love the opportunity to confirm that those grandfathered plan participants would not be treated any differently than those who have ported already who are not part of that grandfather group.
Okay. Yeah, I really all I'm trying to get across is we should be if we're asking folks to pay back $1,000, $2,000, we need to know that there's not alternatives, and that that we're aware of that, and folks are, if that's what it comes to eventually, that folks are prepared for something like that. So
yeah, it's a great question. Okay, Bert.
Thanks, Jacqueline. The last time this was bid out, did MetLife and Prudential bid on it? Do you know?
They did, yes.
Okay, so we did get competitive bids on there. And do you know the last time the $350,000 limit was raised?
That is a great question. I think that information predates our team's involvement with the state on this plan. So I'm not sure if anyone from the SBO has any insight into that topic.
Bert and Jacqueline's faith, what was the specific limit, Bert, that you were asking about? Was it the 350?
350. Yeah.
Okay, yeah. I don't believe that it's been raised at all. We'll go back and confirm that. However, in the interest of being transparent, this has come up as an offer by Securian to increase that. And I think there's opportunity to do that even under the current contract. But I would agree, like, I'm interested in kind of, that's probably the one area where I would say from a member question standpoint, we get asks about, can that be increased, or why is it set at 350? So I would encourage us to continue to consider that as something certainly under the RFP scope that we potentially ask for. And I don't know, Jacqueline, what that looks like, right? From a rating perspective, are we asking them to bid on like the 350 and then bid on some specific amount that we agree is, reasonable to keep from, because again, I think it's really important that we're getting apples to apples proposals from bidders. So, I don't know if we want to discuss that as a group, Bert, but I think that's certainly an area that we need to consider.
That was, I guess that was my question, which was if we, in moving forward with an RFP, would we have an opportunity to re-examine that level and perhaps move it up even, based on inflation over the years? It just seems to be kind of artificially low, but.
Yeah, as part of the RFP requested scope of services, the requested plan design, there's the opportunity to be specific about what the maximum coverage amount requested would be. So it could be the 350, it could be a different amount. We can see that, some employers, the median goes up to $1 million. So there's certainly some room if the state were to decide to bump that up. From a benchmark standpoint, that is, that would be pretty comparable to increase that amount. But that requested scope would be clear that, the maximum coverage amount requested is X, and, you could potentially replicate that for both the group universal life option as well as the group term life option, assuming that bidders are given the option to quote on either or both of those options.
So Jacqueline, I wonder if, as a follow-up, if we can ask the WTW team to think about what you might need from the state in terms of understanding average annual salaries across the eligible employee populations to help us understand what would be a more in line maximum number. You know, like I don't necessarily want to just hone in on $1 million because that's the medium max coverage if that doesn't really align with our employee population, but I'd be interested in a little more guidance on that. So if we can just talk a little bit more maybe offline about that and what we can give you to help with that. Because the other thing, and maybe this is a little harder for you to give us guidance on, I'd also be interested in trying to understand to what extent does increasing that impact what the rates might be proposed as, right? Like, I don't know if that has bearing or significant bearing on what the rates would look like.
Mm-hmm. Yeah, and it would because it would be potentially capping, especially for those higher multiples of base salary, it would be potentially capping some of that. So, you know, we can certainly take this offline and provide some additional thought around what our team might need in order to provide some additional guidance to the state on what a reasonable maximum coverage amount increase might look like, as well as if we have any additional thoughts on the extent of the impact on increasing that amount on the proposed rates. That may be one that might require input from bidders on, but we can certainly have further conversation about that.
Yeah, and I mean, obviously, we should be able to get an idea. You know, we have access to the information currently on like how many plan participants have like, you know, based on what their times salary enrollment is, like how many of them would be impacted if the maximum coverage increased, right? Like I think that would factor in from like an underwriting standpoint. Assuming like all of them right out of the gate would go up, you know, whatever that amount was above the 350, you know, if that is lower than their current base times whatever salary, right?
Mm-hmm. Right.
Okay. Thank you.
Absolutely. Okay. Are there any other questions or comments at this point? All right. Hearing none, we'll flip back to our agenda then. So if I may, I think the next topic we had intended to cover with the group was around the CVS Health Virtual Care Program, and I'm actually going to turn the discussion over to a colleague of mine, Jen Maneri, to take us through this topic.
Thank you, Jacqueline. So we're bringing a solution to you today for the Aetna members or members enrolled in an Aetna health plan today. It is, if we can go to the third slide, I think. Yep, that one. So to give you a little bit of background, currently the Aetna population utilizes Teladoc as their telemedicine provider. And under this offering, they're able to access acute care, behavioral health, and dermatology services. When a member utilizes their services, there's a per claim charge, and there's also a per employee per month fee, administrative fee that the state of Delaware pays. As part of the annual contract review with Aetna, they brought forth a new solution from their parent company, CVS Health, which has competitive pricing, and we wanted to review and consider with you today. One of the other benefits of the program, in addition to the competitive pricing compared to the current Teladoc offering, is there is a holistic care coordination behind the scenes. Members are now, our patient records are now visible across multiple care settings on one platform. So we see more opportunity for Aetna to provide personalized healthcare alerts for navigation support. And this plays into quality and safety overall. members are able to, or care coordination is readily visible in a way that it isn't currently under the teledoc arrangement. And because of this, there will be some efficiencies. There will be integrated data to close gaps before they become emergent and help maintain wellness overall rather than less proactive care. So this will provide opportunity for more proactive care and efficiencies across both platforms. And then Aetna and CVS Health are able to share health records on a more real-time basis between the providers and the patients. And because of this, we feel there may be some cost savings to identify better sites of care, avoiding ER visits and hospitalizations. There will be greater visibility into the records, mitigating duplicate testing, labs, other unnecessary utilization. So I'll pause there for any comments or questions. Okay, so we can take a look at the pricing. As you can see, on the left-hand side, we're looking at the current pricing for under teledoc, and then on the right-hand side, we're looking at the current pricing under the CVS Health proposed plan. Administratively, we're seeing a 20-cent per employee per member drop if the state were to move to the CVS Health plan, virtual care plan. Medical visits are almost the same, but there is a slight savings. So any kind of general medical virtual medicine would now be $55, whereas under the current arrangement, that per claim fee is $56. Under behavioral health, we still see that the first behavioral health consultation for a psychiatric visit would be $215, but then we do see subsequent visits for behavioral health consultations with a non-MD are now $85 as compared to the $100 that the members are currently, or that's currently being passed through the state today. And then or actually that would be 90, I'm sorry, 90 versus the 85. Whereas the $100 would be subsequent behavioral health visits under the teledoc arrangement today. And then finally, dermatology visits today under the current arrangement are $85, whereas under the CVS virtual care model, we see that they would now be $55 as the majority of skin conditions can be handled by a general practitioner. And that's a significant savings from the teledoc model today. So I'll pause there in hopes that I've not confused you on that behavioral health portion. Any questions? I can't see who the first person is, but they're a dial-in.
Yeah, it's Bill Overley.
Oh, sorry,
If I-
Mr.
That's all right. On the previous slide, slide 4, it said to identify better suited sites of care, which I certainly agree with that. Do we have any data available in terms of past practices? I mean, when I think of better suited sites of care, I think of freestanding independent facilities. Is there any history there around how this has worked in the past?
We do have some history, and it's actually a very timely question as we're going to be covering a lot on sites of care utilization, including telemedicine, next month on the joint meeting.
Okay, all right. Well,
I don't have anything today, but I will in about 4 weeks.
Okay, that's fine. And I wanted to pick up on your earlier comment about visits to a dermatologist that mostly can be handled by a general practitioner. I'm curious how a telehealth visit, how dermatologists can take a closer look at individual patient and some of the things that might present on the skin. I mean, I'm speaking as an individual that's had 2 surgeries for skin cancer, melanoma. And in both instances, my general practitioner did not know what it was, and it was a dermatologist that finally was able to identify. And of course, I had a surgical procedure in both occasions. But I'm just curious how this works in the real world in terms of a visit, a televisit with a dermatologist.
So during a virtual visit, there would typically, you would take some pictures to upload to the doctor that you're talking with. If the doctor is unable to diagnose, then they would help do some care coordination and refer you to a or to a dermatologist so that you could have something like that checked out in person. But based on our conversation with Aetna, it seems that the majority of skin conditions can be handled by a general practitioner. Yours would be a special your specific case would be a special circumstance.
Okay, I'm just curious, and by taking a picture, whether they can clearly determine whether it is a melanoma or not. In my instance, both cases, it really did look like you see in the brochures, this horrific, skin eruption. So you've answered my question. I appreciate it, but I tend to be very cautious around these sorts of issues. So.
Yeah, no, that makes sense. I think melanoma is a different kind of bear per se. But I think a lot of the skin conditions like eczema, things like that, those things are very much handled by a general practitioner.
Okay,
in your case,
you.
I think they would refer you to a dermatologist because it would probably need a biopsy.
Indeed. Thank you.
Sure. Bert?
Yeah, thanks. I just want to just get a better understanding. So if I'm a Aetna subscriber and I use telemedicine services, what's the difference going to be between the teledoc versus this new situation?
I don't think it's going to appear that different from the member standpoint. You'd just be using CVS. I think behind the scenes, the platform, Teladoc cannot speak to Aetna today in real time, whereas CVS Health owns Aetna, so they're on one platform, and they're able to share case notes and care coordination a little bit more simplistically than a third-party vendor. And now that this would be an in-house solution, behind the scenes, there would be care coordination, referrals, navigation, alerts, support, guidance that typically you would not see today.
Same providers, same level of service. Okay. And is there any estimate on the savings?
We don't have a savings estimate yet per se. I think this solution was just brought to us. I don't know if we could take that back though and come up with a little.
Okay. Thank you.
Sure.
Janet Spade, can I build up a Bert's question there a little bit? I want to make sure I kind of fully am tracking with this care coordination component that this would offer that we don't necessarily have today with Teladoc. Are you saying that CVS Virtual Health would also potentially have access to Aetna members' other care management records that Aetna has that perhaps wouldn't be available if the Aetna member went to Teladoc today? I'm just trying to sort of understand, is that truly like, enhancement over what is happening today with Teladoc?
I think that A1A would be better able to look into the CVS Virtual Health for care coordination, like the reverse of that. Not necessarily that unless I'm incorrect, and I don't know if anyone is on the line from Aetna that can speak to that at this time.
think I understand what you're saying, Jen. Yeah, maybe we can just take that back for clarification.
Definitely ask that question.
Yeah, I mean, in full disclosure, as an Aetna member, I've used Teladoc a number of times, right? So what I'm trying to understand, I believe that Teladoc can see my prior Teladoc interactions, but I think it's limited to that, right? So what I was trying to understand is, are they able to dig a little deeper? Like I call for a telehealth visit for something that maybe my primary care doctor has seen me for in the past. Like, would there be some deeper level of like access to information for the CVS virtual health practitioner that isn't maybe available for the Teladoc practitioner?
That's a great question. And I think we can certainly follow up with Aetna on that.
Yeah, I think it really gets to Mr. Oberle's question about the dermatology piece of this, which again, in full disclosure, I've used the dermatology option through Teladoc as well, right? So like, I'm wondering, okay, I call them and I have some kind of rash or something, but I know I've seen other doctors in the Aetna network, like, do they have access to any notes history to be able to determine, oh, is Faith calling us about something that she's been seen for before, but just maybe not through CVS virtual care, but could help in diagnosing me and treating me?
Very good questions. And we'll definitely get those answers for you. Because that would be a great benefit.
Yeah, I mean, to Bill's questions in his example, in a situation like that where, I'm calling in but have a history of skin cancer, I would hope at that point they're going to be like, well, wait a minute, time out. Great that you called us, but you need to be seen by your dermatologist, right, for this because of your past medical history. I don't know, I think that's a good example. It sort of resonated with me. And just as an aside, Jen, it's probably not well known by those of us on the call that are local to Delaware, but like access to dermatologists is really difficult here in Delaware. So, I am particularly tuned into any differences between CVS virtual care and Teladoc as it relates to dermatology, because I do see telehealth for dermatology as a really good access point for someone who can't get into a dermatologist quickly.
I agree. I think it's a little bit longer of a wait time for dermatology than some of the other specialties.
Yeah, I mean, sometimes the wait time can be easily 6 months. Well, if you've got something that's going on right now, I mean, that's just not even an option to wait 6 months.
Any other questions? Okay, so our proposed next steps are CVS, due to the fact that CVS Health requires 60 days for implementation, we're proposing a September 1st effective date. We are requesting feedback at this time from this subcommittee prior to moving forward with the implementation. Certainly we can take our questions back and have a future discussion based on today's questions. And then if implemented, the SBO will work with Aetna to send any member communications in advance of the effective date. Mr. Oberle, is that you again?
Yes, it was. I apologize. There's a delay when I unmute, so I apologize. What are we currently paying for Teladoc now? Do we know on an annual basis?
Oh, total annual fees? Not sure, but we can work up an estimate. We're paying more cents per employee per month on the administration and then the claims pass through. So we can definitely look into that as part of the overall site of care steerage for next month, if you'd like.
Yeah, I'd like to know what we're currently paying. I mean, obviously this new contract or this new agreement would be a lesser amount based on what we've been presented. I'd like to know what we're currently paying.
Sure,
Okay, thank you.
no problem. Matt, do you have a question?
Yeah, and just along those lines, I mean, I would just like to know that Teladoc has been presented with the opportunity to perhaps, improve what they're offering and perhaps give them the opportunity to explain like some of these information flow issues that we've been discussing, like from their perspective, what are the issues that may or may not allow information to flow? And if there are some problems that could be solved through contract terms or whatnot, I would just want to give them an opportunity to respond to this before we go and change vendors without a full, without a full procurement.
That is absolutely a great idea. And we can definitely take that back to Aetna since Teladoc is the subcontractor. And the relationship is owned by Aetna today. So we can certainly take that back to Aetna and see what we can do there.
Really good point.
Any other questions? Okay, I think we can move on to the next agenda item then, Jacqueline.
I think it comes back to me. Thanks, Jen. I think that takes us to other business. Do subcommittee members have any other business they would want to bring forth today? All right. We will move to public comment. Carol, do you have anyone pre-registered today?
Nope, I don't have anybody pre-registered today. Does anybody want to make a public comment this afternoon? Please raise your hand. Any hands raised?
Again, next SEBC meeting, Tuesday the 28th, 2 p.m. I had to pause for a minute because we were extending our meetings there for a bit. So that'll be at 2 o'clock. And hope to see everyone there. And I think we can entertain a motion to adjourn.
This is Bert. I'll move to adjourn.
Thank you, Bert. A second?
Ashley, I'll second.
Ashley. All right, thanks everyone. Enjoy the rest of your Monday. We'll see you soon.